under the subject of auditing is verification of assets and liabilities. Assets and liabilities are shown at the asset side and liability side of the balance sheet. An auditor during his audit work had to very carefully verify each and every assets and liabilities shown by the balance sheet on the balance sheet date. It provides him assistance to provide his report and to do his audit work in very effective and timely manner. So let me discuss the meaning of verification. Verification is a process by which an auditor satisfied himself about the accuracy, genuinity and reliability of the assets and liabilities appearing in the balance sheet. We have to go with an inspection technique with the availability of document evidence regarding the assets and liabilities. So here verification means proving the truth or confirm the truth regarding the assets and liabilities of the balance sheet of a business concerned by an auditor in his audit work. Spicer and Pegler defines verification as it implies an inquiry into the value, ownership and title, existence and possession and the presence of any charge on the assets. Next author, J.R. Bartley-Boy, he also defines verification as the auditor must satisfy himself that the asset really existed at the date of balance sheet and were free from any charge and that they have been properly valued. So this is all about verification, which provides that an auditor in his audit work regarding the assets and liabilities shown in the balance sheet have to be put an inquiry regarding their value, ownership, title, existence, position and identification of charge. The ICAI, Institute of Chartered Accountants of India, also defines verification in terms of existence, ownership, possession, freedom for encumbrance, proper recording of transactions and proper valuation of the assets and liabilities. So at the time of verification of assets and liabilities, an auditor is expected to go with all these elements in his verification, that is existence, ownership, possession, proper recording, proper valuation and freedom from encumbrance. The main objective of the verification is as to identify the correct values of the assets and liabilities of the balance sheet, to know whether the balance sheet exhibits a true and fair view of the state of affairs of the business or not, to find out the ownership, possession and title of the assets appearing in the balance sheet. Next is to find out whether assets are in actual existence in the business itself. Fifth, to detect fraud and errors, if any, while recording assets in the books of entry. Sixth, to find out whether there is an adequate internal control existing in the client firm and internal control system is doing well regarding the acquisition, utilization and disposal of assets. 7. To verify the arithmetic accuracy of the accounts of the assets and liabilities. And the last is to ensure that the assets have been properly recorded in the books of account. So all these are objectives that motivate to the auditor to take the verification very carefully of the client business. There are some advantages of verification, that is, with the help of verification, manipulation in the accounts can be avoided, safeguarding to the assets is provided, that proper use of assets should be there. They should be used by the business purpose only. Third, proper recording and evaluation of assets means at the time of recording of transactions regarding the assets and liabilities should be proper care that any type of mistake should not be there, and provide the exact valuation of the assets in the entries. The last is that is also an important objective of the auditing also, to find out the true and fair view of the state of affairs of the business or company. So let me start the verification. Verification may be done with the various techniques. The main techniques are here. First is inspection. It means physical inspection of the assets. Physical inspection of the assets by the auditor. These are the assets which are shown by the balance sheet, and these are the liabilities which are shown by the balance sheet. Next is observation. The auditor may observe or witness the inspection of assets done by the other. In this technique, auditor just observe the processes that is followed by or done by the others in the business concern. And the third is confirmation. It means obtaining written evidence from outside parties regarding existence of assets. For example, if a plant and machinery is existed in the business, then the bill of supplier of the machinery should be there as confirmation from the outside parties. So let me start first verification of assets. But before the verification of assets, we have to take a knowledge about the types of assets. There are various types of assets in a business concern. The various types of assets is, first is current assets. It includes cash, sundry debtors, prepaid expenses, stock in trade, debtors, bills receivables, and other items. Fixed assets. Mainly we can identify the fixed assets with land and building, plant and machinery, furniture and fixture. Next is intangible assets. That is identified with the help of goodwill, copyright, patent and trademark. And the last one is fictitious assets, as like preliminary expenses, discount on issue of shares and debentures. These are the types of assets which will be verified by the auditor in the process of verification. Now, current assets. A current assets, also known as a liquid assets, is any resource a company could use, turn into cash, or sell within a year. Current assets are company's quick cash reserve, ready to cover short-term bills or expenses. Actually, these are the assets on which the operations of the business is depends day by day. All the current assets have affected as an increase or decrease by the operations of the business done day by day. Next is fixed assets. Fixed assets refer to long-term tangible assets that are used in the operations of a business. Fixed assets provide long-term financial benefits. These have useful life of more than 1 year or more than accounting period, and are classified as property, plant, equipment, etc. These are the base of the assets, and maximum investment of the business are captured by these type of assets. Next is intangible assets. Intangible assets are those assets which have no physical existence. They are opposite to fixed assets, because fixed assets have the physical existence. intangible assets can be realized. They does not shows in the balance sheet until purchased. For example, goodwill, patent, copyrights, trademarks. Next is fictitious assets. Fictitious assets are imaginary assets. They don't have any physical existence, no realizable value, but represent actual cash expenditure. The purpose of creating a fictitious asset is to account for expenses those incurred at the time of starting of the business, that is preliminary expenses or discount on issue of shares. Fictitious assets are written off as soon as possible from earning of the company. Actually, fictitious assets are the use expenses that provide the capacity to generate revenue over the accounting period or over the one. They will treat as like as assets and shown at the asset side of the balance sheet, and also they have the treatment to depreciate them, that is known by the written. Now we start verification of various types of assets. First is verification of cash. Cash is of various types: cash in hand, cash at bank, petty cash, cash in transit. Let me start with verification of cash in hand. In case of verification of cash in hand, the auditors should take special care because this is the most liquid assets of a business and it can be easily manipulated. So there should be special care by the auditor in verifying the cash in hand. Auditor is required to check the cash on the last date of the balance sheet and also again after the last day of the balance sheet. So if there is any manipulation made by the checking, then it can be reflected under the process of verification by auditor easily. It is also expected from the auditor that he should go for the surprise check, because surprise check is an element that provide a moral check, and the employees who is dealing with the cash management have a moral pressure and he will go with a proper working on cash handling. In case of various types of cash book, means if there is more than one cashier for various types of cash book, like petty cash book, like branch cashier, like impressed balances with employees, then verification of all type of cash book, whether it is main cash book, petty cash book, branch cash book or impressed account, should be simultaneously done by the auditor for more effective work of auditing. At the time of cash verification, the cashier should be there, because at the timing of counting of cash, both the auditor and cashier should be present for the verification. Auditor is required to get the signature of the cashier on the cash book when the verification is done, and the final cash balance should be noted by the cashier and auditor also. Many times it happens that auditor is unable to check balance on the date of balance sheet. Then he have suggest to the cashier that cashier should deposit all the amount in the bank and provide the pay in slip as the proof of cash balance. And if the cashier not capable to deposit the cash amount in the bank, suppose the time has been lapse of banking working, that over 5 or 4 p.m., then he is advisable to deposit the same cash on the next day in the bank and provide the pay in slip for the cash verification. Auditor have to be checked that if any checks are there, or drafts are there and they are included in the cash balance, then he have to take proper separation between the absolute cash and checks and draft taken as in the cash balance. We have to analyze that if there is any rough cash flow, then all the entries should be transferred from the rough cash book to the main cash book, and balance of main cash book and petty cash book be checked separately. In case of auditor finds any slip or check in respect of temporary advance paid to the employees, then the chit or slip have to be authorized by the authorized signatory of the business concern. Without authorization of the authorized signatory, the chit or slip available as a proof of temporary advance cannot be accepted by the auditor. So, to follow these process or these precautions, an auditor can do verification of cash in hand easily and very effectively. Next is verification of cash at bank. The auditor should go with the checking of bank book and cash book both. If he find any difference, then he have to go for the reconciliation of passbook and cash book and identify the reasons that make a difference between the balance of passbook and cash book. Auditor can also take balance certificate from the bank for more authentication, because the third party evidence is most reliable in case of audit. It should also be checked by the auditor that bank balance should be recorded in the balance sheet. For outstanding check, the auditor have to go with a special query that reason of outstanding and in future when they will be recovered. If any cash deposit in the bank or fixed deposit, then deposit receipt should be required by the auditor from accountant or cashier for evidence. If the auditor seen that overdraft is there, then he have to check whether the overdraft is accurate or not and what is the overdraft limit of the business concern. Next, under the head of verification of cash is verification of petty cash. Petty cash book is always maintained by the petty cashier, which is authorized to small expenses and day-to-day expenses. So, for its verification, the auditor have to go for the balance of petty cash book with the main cash book comparison. If you find any type of differences between the entries or balance, then he is required to prepare a reconciliation with the reason of difference. You have to be very careful about the fictitious payment, that any petty cashier being small amount will not use for the fictitious payments, as it is not so important. Auditor is required to very carefully check the petty cash book in the last days of the month or in the last month of the accounting payment, because these are the gray area when petty cashier try to manipulate or try for the fictitious payments. As per the circumstances or situations, the auditor can check other points related to the petty cash book. Next is verification of cash in transit. Cash in transit means the cash has been sent to the head office but did not received by the head office, and vice versa. Means the cash has been sent by the head office to the branch but did not receive by the branch. For the verification of cash in transit, the auditor should verify it with the subsequent period passbook or cash book, because they provide also a proof of cash in transit. Auditor is also required to prepare a reconciliation statement for the differences he find between the cash book of the previous period and the current period. The auditor can also check the pay-in slip or bank deposit slip for the cash transit. He have to check that cash in transit entry should be passed by only one party. Transit entry passed by only one party, and in the next period it should be checked that the reversal of this entry should be there. So by the following these points or taking these points in the consideration, an auditor can verify cash in terms of cash in hand, in terms of cash at bank, petty cash and cash in transit. The next assets is debtors. Let me discuss the verification of debtors by an auditor. First, auditor have to go with the list of debtors or schedule of the debtors with detail. By this, he take a knowledge about the debtors and their amounts. Next, he can also get the direct verification of debtors balances from the debtors by the mail, by the phone call and by the letter. Again, he can verify the debtors individual account in the ledger books. With this, he can easily identify that what is the opening balance of the debtors and how much amount has been received by them and what is the closing balance. He can get a deep knowledge regarding the transactions between the particular debtors. We have to verify that any type of discount, any type of rebate is there, then it have to be accounted for properly for the maintenance of debtors balances. Bad and doubtful are the traditions of any business. So it is required by an auditor that bad and doubtful debts have to be identified with the proper figure, and if there is any provision for bad and doubtful debts also, then auditor have to verify that particular figure, that it is as per the tradition of the business or it may be extra or less. For the better verification of debtors, the auditor have to categorize all the debtors provided by the list of debtors. That is, which type of debtor is carrying from what time. Means older and newer debtors in the list of total debtors. If there is any type of goods sold to the debtors on return basis, then it should be very much verified by the auditor to find out the exact balance of that particular debtor. Again, if any goods sold on hire purchase system to any debtor, then it is also be verified by the auditor in a proper manner to find out the exact balance of the particular debtor who purchased goods on hire purchase system. In the last, during the auditing, at the time of verification of debtors, if a auditor find that there is credit balance in a debtor's account, then he have to check whether it is set out from the debtor's value or shown as the creditors of the business. Next, assets is plant and machinery. Plant and machinery is the fixed assets of a business concern, and it is tangible assets of a business concern. All the fixed assets capture the huge investment of a business concern. So, at the time of verification of these type of assets, the auditor should go with the very proper. Let me discuss the verification of plant and machinery. As in the case of industry concern, out of total assets, 20 to 50% cost is that of plant and machinery, and hence the auditor is required to take much more precautions while verifying the amount of plant and machinery shown by the balance sheet. What type of attention should be there? Precautions should be there by the auditor when he getting the details list of all plant and machinery and assets that is shown by the balance sheet. He should get the detail for each and every type of plant and machinery maintained by the business and depreciation also. Auditor should trace the opening balances in the plant and machinery, register with the help of last year's audited balance sheet and other related information. Auditor should verify quotations, invoices, cost etc. in relation with purchase of plant and machine. It provides the auditor a detailed knowledge regarding the historical value of the plant and machine. If auditor find that there are sales of plant and machinery in audit period, he should verify the invoice to that effect. If any part of plant and machinery has been sold during the audit period, then it should also be verified by the cash book or passbook. Auditor should check the board resolutions for the authorization of purchase of plant and machinery. He can also take the reference of articles of association and memorandum of association. If any machinery is disposed of and sold as scrap during the audit period, the auditor should check the authorization and valuer's report in that connection. Same in case of any type of purchase. The auditor should check the rates and calculation of depreciation and ensure these are according to the provisions of Companies Act. Because by the use of any type of plant and machinery, depreciation should be there. So it have to be accounted for properly. Depreciation should be shown separately in the debit side of profit and loss account and also deducted from the amount of plant and machinery in the asset side of the balance sheet. The auditor should check whether related expenses incurred on purchase of machinery are duly capitalized. In generally we find that due to the lack of knowledge of principles of accounting, many times accountant treat as a revenue expenses for expenses incurred on the purchase of machinery, but principally all the expenses related to the purchase of machinery should be capitalized properly. So by taking these points, he can go with the proper verification of plant and machinery. The auditor should also check whether proper accounting of profit earned and loss suffered on the sale of any part of machinery or the big part of machinery should be accounted for. If a machine is manufactured by the client itself, auditor should verify that capitalization of material, labor and other expenses is properly done in accounting process. If any part of the machinery is purchased during the audit period, then it should be verified by the auditor that how much depreciation and for which duration should be charged. The auditor should scan the plant register and physically inspect some of the major plants by visiting to the works. It is under the authority of the auditor that if he finds necessary or if he finds good, then he can go for the physical verification of the plant and machinery existing in the books of accounts and situated at the business premises. So these are the points that should be taken by the auditor in his consideration at the time of verification of plant and machinery. Now, next asset is land and building, or it is also known as property. There are two types of property. First is leasehold property, second is freehold property. What is freehold property? Let me discuss. A property which is free from hold. This means that the property business are buying is free from the hold of any body besides the owner. That's why the owner enjoys complete ownership. Now we discuss the verification of freehold property. The auditor should see that freehold land and building are shown separately and not mixed with leasehold or other assets. So, proper disclosure of freehold property or freehold land and building should be there in the balance sheet. The auditor should see that separate account for land and for building are maintained, because on land usually no depreciation is there, but building will be depreciated. So there should be separate account maintained by the accountant in the books of accounts for building and land. The auditor should see that the balance shown on the balance sheet is directly traceable from respective ledger accounts, because the balance sheet, it depends on the trial balance, and trial balance includes the balances of ledger accounts. The auditor should examine the title deeds of the property and see that the assets is in the name of the client and in the free and fair possession of the client. Actually, the plant and machinery should be physically existed in the business premises, and it is always used by the business purpose only. The auditor should examine that the title deed is genuine and proper stamped. The purchase during the year to be examined with the related correspondence, broker's note or auctioneer's note. For the purchase and for the sale of any part of building should also be verified with the cash book or bank. In the case of constructions of the building, auditor should examine the various certifications such as builder's certificate, contractor's certificate, architect certificate, local authority's certificate where required. So these legal requirements should also be verified under the head of verification of building by the auditor. The auditor should also verify the sale if a part of property has been sold during the period under the audit duration, and he should also verify the profit earned or loss suffered, if any, on the sale of a part of property and the treatment of this profit or loss in the profit and loss account or balance sheet. The auditor should obtain a certificate from mortgagee if property has been mortgaged and the deed are with the mortgagee to verify the property. It is expected from an auditor that the terms and conditions of the mortgage should be verified by the auditor also. Title deed should be checked by the auditor and it will be in the name of the client. Land is not subject to depreciation, but see that proper depreciation is provided on building as per the provisions of Companies Act 2013. The auditor should see that the fluctuation in the value is not be considered on balance sheet, but if it has been considered, then see that this is properly disclosed on balance sheet. Auditor should physically verify the existence of assets. Yes, this is the under of the ambit of an auditor, that he can go for any type of physical verification for any type of assets. The auditor is required to clarify and consult with the related lawyer or legal advisor about the property. The legal expenses incurred regarding the property should also be checked by the auditor. The auditor is expected to properly verify the mortgage and second mortgage of the property. The auditor can also see that repair and renewal charge to the revenue, not to freehold account. All the repair and maintenance small nature should be debited to the profit and loss account debit side. Regarding the depreciation, it should be checked by the auditor that adequate provision for depreciation should be there. It is especially checked by the auditor that there should be no depreciation on land, but on building should be there. So by following of these points or taking into consideration of these points, an auditor can easily verify the property. Next is verification of leasehold property. Verification of leasehold property. Let me discuss. In case of leasehold property, the auditor should see that the leasehold property account is separately maintained in the books of accounts by the accountant. He have to see that property is actually in the possession of the client business. This will not be transferred to another business or outside the business. It should be in the business premises for the business purpose. The examiner should examine that lease deed to find out its value and period. Lease deed provide auditors the information regarding the time period of lease and exact value of deed. The auditor is required to see that the lease deed is properly registered with the registrar, because lease exceeding 1 year is invalid unless it has been granted by a registered document. The auditor should see whether sublease is valid as per sublease agreement, in case it is granted by referring to lease agreement. The auditor have to ascertain those conditions, the failure of which might result in the forfeiture or cancellation of lease, and see whether they have been properly complied with. The auditor have to see that the lease rent and other expenses like insurance, etc. regularly paid, and in case of insurance premium, last receipt should be checked by the auditor. In case of any provision is required to be made for dilapidation, see that the same is properly and continuously provided and amortized over the period of the lease. The auditor have to see that the depreciation on lease is provided by straight line method, including that of land too. So these are the points that should be kept in mind, or with the help of these process, these type, an auditor can perform verification of leasehold property in a better way. Next assets is motor vehicle. Let me discuss some point regarding the verification of motor vehicle by the auditor. Okay. The first is the editor should ensure whether the business concern is maintaining proper and separate register giving full particular of the vehicles. If there are more than one vehicle, then a list should be received by the auditor from the management of business concern. Auditor should check up whether opening balances have been properly traced in the register or not. Auditor should check up whether the entries regarding new purchase, and sales of old vehicles have been properly recorded or not. Properly recorded means if there some loss or profit on the sale of old vehicle, then it should be accounted for in the profit and loss account properly. Auditor should check various documents such as agreement, invoices, bills, orders, authorization letters or slips, etc. relevant to the purchase and sale of the vehicle. Because any type of sale or purchase, sale means sale of old vehicle and purchase of new vehicle will not be unauthorized. It should be properly authorized by the signature authority. The auditor may also go for the minutes of meetings for this purpose. The auditor is expected to check the auctioneer's statement, valuer's report, etc. in case of sale of vehicle as scrap, because without any proper valuation of old vehicle, the vehicle cannot be sold. Next, the auditor should see profit earned or loss suffered on the sale of properly accounted for. The auditor have to verify whether fair depreciation on vehicle is provided or not. It should be checked with the provisions of the Income Tax Act that what rate will be applicable on the vehicle's depreciation. The auditor should verify registration and license to see all the vehicles are in the name of the auditee or not. Means all the bills and title should be in the name of client business. If there is any purchase of second hand vehicle, then transfer deed should be there. Auditor should physically verify all the vehicles by inspecting their registration number, chassis number and any other related evidence. The auditor should check the certificate from lender in case receivable book of any vehicle is lying with the lender. We have to see whether proper insurance on vehicle are paid or not. If paid, then last receipt should be verified carefully. So, with the help of these points, an auditor can easily verify the balances contained in the balance sheet regarding the motor vehicle. The next assets is investment. If we talk about the verification of investment, then an auditor is required to first get the schedule or list of investment. It may be possible that more than one investment should be there in client business. Then he have to go with the opening and closing balances of the investment. Opening balance should be verified with the previous year audited balance sheet, and for arising closing balances, addition or sale of investment during the year should be considered. The auditor have to verify that if there is any new investment or addition in investment during the year, then it should be properly accounted for and added in the opening balance of the investment account. Same in case of regarding the any sale of investment during the year, it should be properly accounted for, and on this sale of investment, loss suffered or profit earned should be accounted for. To compare the market value with stock exchange quotations regarding the investment held by the client business. The auditor is also required that on the investment purchased or done by the client, all the income has been received timely. If there is any error, then it will be separately noted and reasons for there also be identified. Next is provision for shortfall in the values. If there is any shortfall in the value of investment, then proper provision should be made by the client in their books of accounts. Next is proper disclosure. It will be it will be seen by the auditor. Then proper disclosure of investment regarding the applicable laws should be there. It is expected from the auditor that if investment is put as security or lost as security or mortgage, then it should be properly shown in the books of accounts of the client. So these are the points by following which an auditor can easily verify the investment shown in the balance sheet. Let me discuss a new assets for verification, that is goodwill. Goodwill means the capacity of business to earn extra profit. So how can a auditor verify the goodwill? Let's discuss. Firstly, the auditor should verify that whether the amount of goodwill has been purchased or acquired. It should also be checked by the auditor that if goodwill is created by the revaluation of assets, then proper accounting treatment should be given to the goodwill value. Auditor should see that goodwill is properly disclosed in the books of accounts by the client business. The return of goodwill is also be taken in the consideration at the time of verification by the auditor. We have to see that how much part of goodwill has been written off and rest amount should be written off in proper time duration. The auditor is also required to check if goodwill is created by other means, then it should be clearly shown or proper disclosed in the books of accounts of a client business. Next asset is preliminary expenses. For the verification of preliminary expenses, auditor have to go with the information mentioned in the prospectus, that what amount is provided in the prospectus for preliminary expenses. The auditor have to see contract with underwriters, with promoters and vendors for preliminary expenses. Authorization of board of director is very much required at the time of verification of goodwill by the auditor, that what amount and what process is given by the board of director for the preliminary expenses and its recording in the books of accounts. The auditor have to very carefully analyze actual expenditure on the preliminary expenses and the amount quoted or permitted by the prospectus, and if there any difference find by the auditor that is beyond the limit of amount provided in the prospectus, then it should be communicated by the auditor to the management and also should be included in the audit report. Write-off of preliminary expenses will always be checked that which type of head are used for the writing of preliminary expenses. The total amount of preliminary expenses will be written off by spread total amount at least over 5 years. The suitable duration is 5 years, but it may be changed as per the circumstances and requirement or permission by the prospectus. If during the verification of preliminary expenses, auditor find that a part of preliminary expenses has not been written off yet, then he have to check that this unwrite-off amount of preliminary expenses will be shown in the balance sheet at asset side under the head of miscellaneous expenditure. The auditor have to see that amount of written off of preliminary expenses should be accounted for separately in profit and loss account of the business concern. Auditor have to ensure about the proper disclosure of the preliminary expenses in the books of accounts and also see compliance with the provisions of Companies Act 2013 regarding the disclosure and presentation and accounting treatment of preliminary expenses. Next asset for verification is patent and trademark. Patent and trademark. First of all, auditor have to acquire the list of patents with full detail, because it may be possible that in the client business there may be more than one or two patent and trademark. Then auditor have to check the ownership certificate with the help of registration certificate of patent and trademark by the authority. Then if he find that patent or trademark has been purchased, then he have to check the surrendering certificate or surrendering letter from the original owner of the patent and trademark. It is also advisable to the auditor that he have to check that how much cost is incurred and what are the relevant expenses for the patent and trademark, and all they should be capitalized. Revenue treatment for the cost on relevant expenses for patent and trademark will be wrong. It should be capitalized only. If patent and trademark is a result of research and development of the business itself, then expenses on research and expenses for research and development of patent and trademark, they also be capitalized as the cost and relevant expenses of the patent and trademark. The treatment for the cost and relevant expenses and expenses on the research of patent and trademark should be same, that is capitalization of these expenses. Auditor have to check that whether the patent and trademark alive or enforceable. If there is a requirement for the renewal of it, then he have to check the payment of renewal fees. And regarding the renewal fees, the auditor is expected or required to check the last receipt for the validation, because this is the only proof of the renewal of the patent and trademark. The auditor also can verify the payment of renewal fees with the cash book and bank book also. The cost and relevant expenses and research expenses for the patent and trademark should be capitalized, but another side means renewal expenses of patent and trademark should be debited in the profit and loss account debit side. It should be very carefully verified by the auditor that what type of expenses is there. This is related to cost or relevant area or research expenses or renewal fee. Then auditor is required to check writing off of the patent and trademark over the suitable years. The auditor is also required to check the provisions regarding the presentation and disclosure of patent and trademark in the books of accounts. So, by taking these points into consideration by auditor, an auditor can do the verification work in very effective manner regarding the patent and trademark. The next asset is copyrights. For the verification of copyright, first the auditor have to check the registration of copyright by the registration letter or registration certificate. Regarding the royalty of copyright, it is also advisable to the auditor that proper recording of royalty in books of accounts have to be checked or verified by the auditor. Regarding the various numbers of copyrights, the auditor is required to get a list or schedule of copyrights with full detail. By this, he can observe that how much copyrights is there and which is the oldest and which is the current and which is the middle time duration. For the valuation, it should be checked by the auditor that the copyright amount should be shown in the balance sheet on its proper value without any extra increase or decrease. In case of revaluation of copyright, if any difference is there, then it should also be accounted for. Proper disclosure regarding the copyrights in the books of accounts should be verified by the auditor. Copyright is also have the treatment like preliminary expenses, that is written off. It should be written off properly in the books of accounts by the accountant. If any type of renewal of copyright is there, then renewal fee should be paid and last pay slip should be checked by the auditor, and it will also be ensured by the auditor that renewal fee should be shown in the debit side of profit and loss account. Regarding the and in case of cost of copyright, or if copyright is developed with the research, then these type of expenses should be capitalized in the books of accounts of the client. So with the following of these points or taking consideration into these points, an auditor can effectively do the work of verification of copyrights under the auditing process. There are various other type of assets for which we can discuss the verification process, but we can conclude that every type of assets should be verified with the techniques of inspection, observation, and confirmation with the help of inquiry about its existence, its position, its ownership and title, charge or lien, proper recording in books of accounts, or in terms of valuation. If we analyze the proper process of verification, then we find that valuation is always take a great part of the process of the verification. So at the time of verification, we can also go with these statements that valuation and verification of the particular assets, or verification and valuation of the particular assets, because valuation is the most important part of the process of verification. It's okay that verification have a wide range. It includes checking the existence, position, ownership, title deed, lien or charge, and also valuation. So by the checking of existence, position, ownership, title, valuation, charge, and lien or proper recording in the books of accounts, a verification process can be easily completed and auditor can do his audit work in a good and better manner.